On to other economic news now. After 2 straight months of promising growth, the BankservAfrica Economic Transactions Index fell in February, signaling the country's deteriorating economic activity. The latest data illustrates the pressures facing businesses, namely power cuts, interest rates, as well as higher inflation. Independent economist Elize Kruger joins us this evening to unpack this further. A very good evening to you, Elize, and always thank you for joining us for these kinds of conversations. And I suppose that the period that we are looking at is one where we saw some of the worst load shedding that the country has ever seen, and that of course has had an impact on the retail sector but also on consumers who just don't have that much spending power anymore.
Absolutely, Rufiwa. The data refers to February, and we've had harsh load shedding in the month of February. And on top of that, we have still some other economic challenges as well. Elevated inflation. Food inflation is still above 12%. Also higher interest rates. Interest rates remain high and might even increase a bit further. So there are many headwinds. And then on top of that, we also see global economic, demand coming down. So that impacts on South African exports. So overall, the economic environment remains quite challenging and dismal in South Africa.
So then, what are we looking at in terms of the rest of the performance this year, Elize? It might be a little bit premature to preempt what we're likely to see, but is this the kind of trend that is likely to continue, just given those headwinds that you just broke down for us?
Well, let me say there's very little that's changed that looks different this year compared to last year. Load shedding is a big one. It's actually worse, I think, in the early months compared to early months of last year. But on the inflation front, one could say there's a bit of a sliver of positive news. We have seen an upper turning point on our consumer and producer price inflation cycles in July last year. However, the current levels, for instance, on CPI at 6.9, it's still elevated. It's still above our target band. It's not yet at comfortable levels for the Reserve Bank. In the meantime, the rand exchange rate has slided quite a bit compared to the time of the previous Monetary Policy Committee meeting. And there's really an expectation that we might even see a further hike in interest rates, although we should be close but to what I would like to call an exit level. We have seen quite aggressive monetary policy tightening in South Africa as well, now in a process or in an attempt to address inflation expectations. And also given that we've seen similar hikes globally. And, we need to also preserve a bit of our yield differential, for instance, compared to the American interest rates. Otherwise, the rand could even slide more.
Something that's also slid quite a bit was GDP for the fourth quarter of last year, contracting by about 1.3%. The outlook that's been given by the Reserve Bank, a bleak one at 0.3%. Just based on that, and also the retailers indicating that the losses are going to be quite great because of load shedding and other higher input costs, just the operating environment in South Africa is going to be a tricky one.
Absolutely. We are getting more and more reports, anecdotal evidence, actual numbers from companies saying, the extra cost of load shedding was X, and we're talking here billions of rands if you look at it at a cumulative basis. So that type of extra cost will either have to be absorbed by a company, that would mean lower margins, or it get passed through in terms of higher prices, and that would mean inflation higher for longer or sticky to come down. So both avenues, I would say would be negative for the economy, and we are seeing, more and more evidence of that arising.
And then just a final thought from you. We have been plunged rather into the grey listing, and of course efforts are being made at the moment to deal with issues around that. Just your thoughts of that having a broader, perhaps indirect impact on economic growth and operations in the South African market.
Absolutely. I would say that's just another, layer of negativity for an investment in South Africa. As there's now this, sort of question mark about us and, whether we do enough to keep, our financial control and all of that in place. So I would say, on top of what's already a dismal economic environment, so we do not offer a very attractive investment, I would say, landscape right now compared to other emerging markets. And then on top of that, we've got this sort of newly addition to the challenges in terms of the grey listing.
Thank you very much for those insights, Elize Kruger, independent economist, breaking down the latest data around what consumers and retailers are doing in the economic space.